Just because money has not yet been received, it does not mean that revenue has not been earned. That's why, in accounting, we have the term accrued income. It is listed under current assets in the company's balance sheet. Accrued expenses are a company's liabilities, and they are shown in the company's balance sheet as current liabilities. Do you know why? Because it means that the company is obligated to produce income or cash in the future in order to pay the expenses. What is accrued? To accrue means to accumulate over time, most commonly used when referring to the interest, income, or expenses of an individual or business. Interest is a savings account, for example, accrues over time such that the total amount in that account grows. What is accrued income? Accrued income is revenue that has been earned by providing a good or service but for which no cash has been received. For an example, income from services. Suppose a service provider company provides its services to the customer, and the customer promises to pay after some time, and the payment regarding those services will be treated as accrued income. Accrued income are recorded as receivables on the balance sheet to reflect the amount of money that customers owe the business for the goods or services they purchase. Accrued income is recorded when an adjusting journal entry that recognizes items that would otherwise not appear in the financial statements at the end of the period. It is commonly used in the service industry, where contracts for services may extend across many accounting periods. Accrued revenue is the product of actual accounting and the revenue recognition and matching principles. The revenue recognition principle requires that revenue transactions be recorded in the same accounting period in which they are earned rather than when the cash payment for the product or service is received. The matching principle is an accounting concept that seeks to tie revenue generated in an accounting period to the expenses incurred to generate that revenue. Recording accrued income. Accrued revenue is recorded in the financial statements by way of an adjusting journal entry. The accountant debits an asset account for accrued revenue, which is reversed with the amount of revenue collected, crediting accrued revenue. Accrued income covers items that would not otherwise appear in the general ledger at the end of the period. When one company records accrued revenues, the other company will record the transaction as an accrued expense, which is a liability on the balance sheet. When accrued income is first recorded, the amount is recognized on the income statement through a credit to revenue. An associated accrued revenue account on the company's balance sheet is debited by the same amount in the form of accounts receivable. When a customer makes a payment for the goods or services received, the accountant makes a journal entry for the amount of cash received by debiting the cash account on the balance sheet, and then crediting the same amount to the accrued income account or accounts receivable account. What is accrued expense? An accrued expense, also known as accrued liabilities, is an accounting term that refers to an expense that is recognized on the books before it has been paid. The expense is recorded in the accounting period in which it is incurred. Accrued expenses are recognized on the books when they are incurred, not when they are paid. Accrual accounting requires more journal entries than simple cash balance accounting. Accrual accounting provides a more accurate financial picture than cash basis accounting. Large public companies with shares on stock market exchanges are often required to comply with accrual-based accounting, as opposed to the cash method of accounting. How are accrued expenses accounted for? An accrued expense, also known as accrued liability, is an accounting term that refers to an expense that is recognized on the books before it has been paid. The expense is recorded in the accounting period in which it is incurred. Since accrued expenses represent a company's obligation to make future cash payments, they are shown on a company's balance sheet as current liabilities. Comparison of accrued income and expenses. Accrued income refers to the income that has been earned but has not yet been received or recorded. This typically occurs when goods or services have been provided but payment has not yet been received. Accrued expenses refer to expenses that have been incurred but have not yet been paid or recorded. This typically occurs when goods or services have been received but payment has not yet been made. Both accrued income and accrued expenses are important to track and record in order to accurately reflect the financial position of a company. Accrued income and expenses are typically recorded in the accrual method of accounting, where revenues and expenses are recognized in the period in which they are earned or incurred rather than when payment is received or made. Overall, the key difference between accrued income and accrued expense is that accrued income represents income that has been earned but not yet received, while accrued expenses represent expenses that have been incurred but not yet paid. Both are important to track and record in order to accurately reflect the financial position of a company.
Here are some other examples of accrued income and accrued expenses. The first one is interest on a bank account that has been earned but has not yet been paid or recorded. The second one is rent that has been earned but has not yet been collected from a tenant. Third is interest earned on a savings account but not yet been paid out. The fourth one is rent collected for a property but not yet received by the owner. And lastly, consulting fees earned but not yet invoiced or received. Again, these are the examples of accrued income. Here are some examples of accrued expenses. The first one is interest on a loan that has been incurred but has not yet been paid or recorded. Second one is salaries and wages that have been earned by employees but have not yet been paid. The third one is utilities that have been used but have not yet been billed or paid for. Next is salaries and wages earned by employees but not yet paid out. The fifth one is utility bills that have not yet been paid. And lastly, taxes owed but not yet paid to the government. Again, these are the examples of accrued expenses.
A customer borrowed some goods from a sari-sari store and requests to list them in his/her name and he/she will pay it next week.
Pabili po. Ano yun? Colgate nga po. Yung close up po. Colgate lang, close up po? Di ba parang slang yung brand? Oh, saka po Pampers. Yung Happy. Oh, ay, pati po pala Lucky Me. Yung Homie. Ano ba yun? Pa-isa-isa? Dapat sinabi niya na lahat para isang kuhaan na lang. Ano pa? Wala na po. Sure yun ho? Oh, Utang daw po muna sabi ni Mama. Sa Lunes niya na lang daw po babayaran.
Ano ba yun? Katok ng katok eh. Attitude po tendera na to. Bibili lang naman eh. Pabili nga po ng century 2 na isa. Tapos 2 pansit canton. Ko, yan lang naman pala yung bibilin. Kung cellphone, kumuha ka nga doon ng 2 pansit canton sa, century 2 na. Saglit lang. Ito na, oh. Ay, ate, paano na lang po? Ano? Palista na lang po sa pangalan ni Papa. Ano ba yan? Nagmamadali ka masyado tapos wala ka palang pambayad. Palista na lang po sa pangalan ni Papa. Babayaran niyo na lang po sa sahod niya. Padagdag na lang po sa listahan ng utang. Nako, kailan kayo magbabayad? Sa sahod nga! Paano ng sahod na yan? Ikaw, puro ka love life, puro ka tawa dyan, puro ka love life. Maglista ka nga ng utang daw dun si Mangkanon. Ito na nga, oh. Dalawang pansit canton, tsaka century 2 na, Wala kasing love life, baka ganyan. Ay, wow, gumaganon. Dami talaga mga kabataan ngayon. Basa ko po. Gagi, narinig mo yun. Sabi, pero sumala na yung mga tendero.
Transaction about accrued income and accrued expense. On December 12, RV, a sari-sari store owner, recorded goods sold on account for the period December 5 to 12 amounting 1,050 pesos. In this transaction, our first entry is account receivable as well as our debit entry. We need to write the date and the given amount in the transaction. Second entry is goods sold, and we also need to write the date and the peso sign and the given amount in the transaction. Goods sold is credit because RV is the sender. Same goes to journalizing. Our first entry is account receivable and debit entry, and second entry is goods sold and our credit entry. We also need to write the date and the peso sign and the amount given in the transaction. On December 12, RB, a sari-sari store owner, recorded cash on account from customer for fee earned December 5 to 12 amounting 1,050 pesos. In the second transaction, our first entry is account receivable and also our debit entry. We need to put the date, the peso sign, and the amount given in the transaction. The second entry in the second transaction is goods sold, and we need, as well as our credit entry, we need to put the date and the peso sign and the given amount in the transaction. Same goes to the journalizing. The first entry in the second transaction is account receivable and also our debit entry, and the goods sold is the second entry and the credit entry. We also need to write the date and the peso sign and the amount given in the transaction.